Welcome to the Best US Investors Two Guys regular show. We're back. We took a week off. A lot of things been going on. This week we're going to get into basically Mark's rant about, is this a soft landing or is this the beginning of something bigger and more disastrous? We're also going to talk about the consolidation of auto dealerships and much, much more. So let's get going. Hey,
Hey,
Mark.
so how's Texas?
Texas is warm and dusty.
There you go.
That's
Well,
yeah. It's not a lot of sunflowers right now, but
right.
lot of dust. It's very dry here right now.
Yeah.
But
Yep.
hopefully we'll
There
get
you
a
go.
little rain here
Yeah.
soon. So,
Well,
but we do have. Go ahead.
I said, well, I'm in baseball season, so as long as the Yankees keep winning, that's what I focus on. So,
Awesome.
um, you know,
Yeah, we were just talking about that, about maybe it'll be a Subway Series kind of thing.
could
So
be, could be.
I'm
Yep.
I'm not a big baseball fan, but I like the idea of two city or you know, rivalry kind of thing. It makes
Well,
it
it'd be
fun.
that, or like you said, it could be a coastal thing too. If the Yankees would win and the Dodgers would happen to win, it would be a coastal thing. If the Dodgers would win and Baltimore wins, it'd be a kind of a coastal thing. So yeah, it'd be
Right.
interesting.
There'll
But
be
I
some
think,
sort of twist to it.
yeah, I mean, it's going to be a big market World Series because there's big markets in there. The smallest is Baltimore, and that's not really, small.
Right.
Yeah.
Yeah. So what's
So
on your
anyway, that'd be
mind
fun.
today?
Oh my goodness, 2 weeks worth of pent up frustration.
Chris?
I was just thinking,
Welcome to therapy.
yeah, I keep thinking about, you keep hearing on the news, it's a soft landing, it's a soft landing. Well, what the heck, is a soft landing? If you go back right before the financial crisis, the great financial crisis in, the late 2000s, 2006, 7, you see the same headlines, and I didn't pull any up, but you can just Google it. And they're all talking about it's a soft landing. It's going to be a soft landing, going to be a soft landing. You can see what happened. Our financial system crumbled, you know. So
Yeah.
I got to thinking about that. And then you look at the Fed, and I think the Fed's a little confused because, they dropped interest rates by, half of, 50 basis points. Okay, that was huge. Why did they do that? Well, because unemployment. Unemployment went up to 4.3%. And so they hopped off the inflation and their goal of 2% and jumped over to employment. It's like a little kid soccer team. I don't know if you've ever seen it, but when you're a
Yeah.
little kid and you're on a soccer team, you're supposed to stay in your position. Everybody goes to the ball. No one stays in their position, except
Right.
maybe the goalie kids. And you got 20 kids running around chasing the ball around the whole field. That's what I kind of feel like the Fed's doing right now. So I'm going to talk a little bit about two things that they worry about and what's happened. Okay, CPI or inflation and employment. And so their goal has always been through these long months of never cutting, 2% inflation. We want 2%, rise of inflation. That's what we want to do. I mean, we're already up on average since they've started this whole transitory thing. We're up on average 20%. You can go to look at it, and car insurance is up, 50%. Other stuff is up this and that. Oil fluctuates. But if you look at inflation, they said inflation is good enough that we can drop the interest rates 50 basis points. And if we look like last week, we had the CPI came out, and for the 52nd straight month, um, core consumer prices rose on a month-over-month basis in September, the strongest since March. That left the core CPI year over year up 3.3%, hotter than the 3.2% expected. The headline CPI also printed hotter than expected with the year over year CPI of 2.4%. So they never got their 2%. If you dig into the CPI, and that's Consumer Price Index, the Motor Vehicle Insurance Index rose 1.2% in September, following a 0.6% increase in the previous month. The index for apparel increased 1.1% over the month, and the index for airline fares rose 3.2%. The index for education, household furnishing, operations, personal care, used cars and trucks, and new vehicles also increased in September. And then right after that, the Fed chair president, Chicago president Austin Goolsbee, which is a really cool name, especially in October. I bet he had a
Right.
lot of fun on Halloween. He stated that he wasn't overly concerned with the hotter than expected September inflation report and maintained his stance that the Fed has moved beyond focusing solely on price pressures. Okay, obviously. Okay, but
Yeah.
they did lower the Fed rate by half a basis points or 50 basis points. So they obviously were worried about something. I think it was employment. So then the PPI, the producer price index, came out, and that jumped to 2.8% year over year. And that was hotter than what was expected at 2.6%. As the core PPI, which X food and energy, rose 2/10 month over month, and that was expected. So the PPI and the CPI are going the wrong direction now, which kind of reminds me back, in history when the Fed had done this before, hadn't quite tamed inflation, started lowering rates, inflation took off. So we're going to see if history
Yeah.
repeats itself. I don't know. We'll figure it out. So after that, here we got another Fed, Governor Waller. He voiced concerns over recent inflation data, signaling that the central bank must proceed cautiously on interest rate cuts. Waller emphasized the economy is on solid footing, with employment near the Fed Open Market Committee's maximum objective, but he added the latest inflation data was disappointing. Hmm, really? Okay, so I look at inflation the way most regular guys and gals look at inflation. Has the price of eggs gone down? Has the price of meat gone down? Has bacon gone down? Has potato chips, bread, any of that gone down? No, no, no,
Yeah.
no, no, no. They keep rising. Now we see a little bit of, oil has gone down. So we see our gas pumps gone down, and mine went, below $3, and now it's above $3 again. So it's starting
Yeah.
to tick back up. We got these war issues and stuff going on. So no, it's not where it was, and inflation's still there, and that's why people are hurting. That's why regular people like us are hurting. But they don't ever tell you that. Steve Leisman gets on there with his multi-million-dollar job and flies around the country acting like he's a Fed official, defending these people, and he has the script, and he follows the script, and all you have to do is look and read the report yourself, and you'll figure this out. So that's the inflation side. Let's talk about the jobs side. Okay, so the jobs report came out, and then all these jobs, and then right after the jobs report came out last week, initial jobless claims came out. So the number of this is filing for unemployment. The number of individuals filing for unemployment benefits in the U.S. rose by 33,000, reaching a total of 258,000 for the week, surpassing market expectations of 230,000. This marks the highest level in 14 months. Okay, so I think we're starting to see layoffs. I think we're starting to see these strikes effect, and it's a lagging kind of effect. Okay, so you and I get laid off. We might be working for a bank or a technology company. They give us 6, 8 months, whatever severance,
Right.
and so we can't file for unemployment. But we're seeing constantly, unemployment or layoffs come out in a lot of companies. So what we said, was look at this, look at these numbers. And we said this last week on our Zoom call. We've been saying it. If you look at the numbers in the jobs report, it was all government jobs, okay, and it was all restaurant jobs, okay, part-time jobs.
Part-time
And the
jobs.
government jobs, majority of those were temporary. So I think they're spiking the numbers right before the election. This is just me and my opinion, because how does it go from 4.3% to 4.1% all of a sudden? And now we have jobless claims going up. Just doesn't jive with me. So there's another guy. I was reading an article. His name's Paul Dietrich, and he wrote a little article, and he kind of hit exactly what I was thinking. He said the U.S. is riding high, but one strategist says economic optimism will eventually be cut short as unseen labor weakness bites. That's according to Paul Dietrich, who warned that the employment conditions are worse than analysts seem to grasp. The U.S. is riding high, but one strategist says, well, hold on, I said that all right. Eventually, the U.S. economy will fall into recession, catching off guard the Fed, the U.S. administration, and the majority of economists and analysts, Dietrich wrote. In his latest monthly commentary, the B. Riley Wealth chief investment strategist cited that September's jobless rate would have been 4.5% if temporary government positions were eliminated. Dietrich pointed out this year's significant job in state and local government employment, adding that the job market's perception of strength. Okay, in his view, the rise of these positions came after $500 billion worth of COVID era stimulus programs were finally delivered to regional governments this year, which rushed to use these funds on new positions before September 30th fiscal year end decline. Unfortunately, almost all these jobs were listed as temporary, and most of these jobs will be lost over the next few months, Dietrich wrote. So what he's saying is unless state and local governments have the money to continue to fund these jobs, they're going away. But it
Hmm.
bumps us right past the election, okay, that it looks good for the jobs. So again, here on top of this, if these are temporary jobs and they're going to go away, what's the future jobs report going to look like? You know, so
Well,
again,
based,
look into these, yeah, look into these jobs reports and and make up your own mind of what you're seeing because on one side, jobs are abundant and aren't we doing great? And the market goes up. The Fed looks at that data and says, "Oh wow, we can cut, we can do the market's great." On the other side, we're looking into these reports, which they have 400 PhDs at the Fed. You'd think one of them could read into these reports and say, "Mr. Powell, you might want to look over here and see what these reports actually say." But it doesn't seem that that's what they're doing. Do you have any comment on that?
yeah. Well, I guess I wonder if it wasn't an election year, would we continue to see this kind of reporting um, on CPI and PPI and all that? Would we, or would the truth really come to the surface? And honestly, I believe it would not come to the surface. We would be doing this. And the reason is people don't want to be, you know, if the truth came out in a big way and it was just straight, here's the numbers, here's what it represents, here's this, that, and the other, this thing would tank. I mean, the economy, I mean, the momentum behind that negativity would just drive markets down, 30, 40, 50% again. And so I wonder if it's an election thing or if it's we have stepped way over the cliff on this balsa wood diving board that's about to snap. And we're just trying to extend it until we figure out what we can do. And dropping Fed funds rates by 50 basis points, that's an aggressive move when the economy is supposedly doing well. Um, so I wonder if it's just we're so far over our skis that they're just trying to keep a little bit parallel to the ground before we hit it, you know? I don't know. But I think the truth is the data is saying it's slowing, it's you look at revenues. You look at revenue. We talked about this on the Friday call about revenue growth and the rate of change of revenue growth year over year, quarterly year over year, and it's declining. And now we've got earnings season, and I think you're going to see more of that. Even
You were talking
anyhow
about, yeah,
about are these number would these numbers be different if it weren't a presidential election year versus what they are today?
right.
Um, I don't know, but it seems more and more of the media is so skewing things one way. I mean, it's really obvious to me, and I think too, probably quite a few people are catching on to this. Um, and so when I look at these numbers, I'm like, this is not sustainable. Like you said, those government jobs are temporary. When they roll off after the election, how bad will it look? Uh, or will it roll off? Will they extend them in some way or another? I don't know. So I think you just have to go with more of, okay, this is what we see. This is the real interpretation of it, in our opinion. How do I position for it? How do I protect myself for it? Because at
Well, I
some
think,
point,
yeah,
it's going to melt down or
I
has
mean,
to.
they're supposed to do this for us, and and you'd think we'd have, you know, a media and agencies and financial people who would dig into this so that regular guys like us don't have to and say, okay, I see a problem here. Why don't you guys talk about this? And it's always the headline news, and that's what frustrates me is why do you have to do that? Why can't you just tell the truth? And give us the facts and let us decide. Well, I guess they think we're too stupid as regular people in the country. I don't know. Maybe
I
maybe I'm
don't.
wrong.
I don't even think it's that. I think it always comes down to money and power.
Could be.
I mean, it's historic. I mean, that's what human beings do. We position ourselves to win,
Well,
to have our idea to win. And
isn't
that's what I
controlling
think is
isn't
happening.
controlling the narrative power though? Controlling the narrative is power.
Right.
Yeah.
It's a winning of power, but you don't want to lose it, so you keep doing it. And I think
Yeah.
in the last couple of years, the narrative has been so strong to one direction. And and I think we're starting to see the worst of it. So
Yeah.
that's why you have our show. So we
That's
can
right.
talk about this stuff and what we're seeing in it, you know. So but yeah,
Yeah.
I don't think it's sustainable though. I
Right.
do
No, I
think
don't either. And I think you're starting to see it fall apart. And but we'll see, And again, the market's not the economy, but I got something coming up, that
yeah,
may be showing that it's falling apart. So we talked a little bit about we talked about jobs. We just saw that, a lot of temporary jobs. And then again, I say a lot of companies I see every week laying off, and one of them's Nikola. Okay. And we're going to talk about auto industry here later too. But Nikola yesterday laid off 135 employees, or 15% of its workforce, amid a persistent cash crunch with little room to sell more stock as its prices slide. At 29.07%, Nikola has the third highest percentage of short interest. Okay, so I think that stock's like at 30 cents. Now, remember the big truck, they rolled down the hill and it didn't have an engine in it or
oh
whatever.
yeah,
Okay, so there you go there. Then let's
yeah,
look at Stellantis. Again, we're talking about jobs. Stellantis, which is Chrysler Dodge, got bought up by Fiat, and they have Maserati and Alfa Romeo and all that. They're in big trouble. They're going to close, or they're going to axe 1,100 jobs in Warren, Michigan, and has revealed that more job cuts are on the cards on the back of declining sales, compounding a slew of recent issues for car making giant. The company started cutting jobs at the Warren Truck assembly plant over the weekend after it stopped building the Ram 1500 Classic. I mean, I don't know where I live, your pickup is almost as important as who you choose for a wife. And
right.
if it's a Ford F-150 or it's a Chevy 1500 or a Dodge Ram, people are into their trucks and they will argue the point over beers all night. And so my Dodge friends, who I call my Fiat friends now because Fiat, the Italian truck maker, uh,
Yeah,
the fact that they're stopping building the Ram, which is a really cool truck, and
yeah.
my son-in-law races these trucks. He's a world champion of diesel truck racing, and when I tell him about his Fiats, he just goes nuts. But again, the 1500's going away, the Dodge brand's going away. I mean, you're going to see a lot of layoffs come up with Stellantis, and so you think about all that news that we're getting, it's a soft landing, and we think about, well, how are the consumers feeling? So Primerica's latest financial security monitor report for the third quarter found that 55% of middle income households now rate their personal financial situation negatively, a 6 point jump from the previous survey. For the first time in a year, a majority of middle income households are feeling negative about their personal finances, said Glenn Williams, CEO of Primerica. In fact, this latest report represents the highest negative rating we've seen since we began fielding the survey exactly 4 years ago. Okay. Does that sound like consumer sentiment is up? Does that sound
Oh,
like we're doing well? People lose their jobs, they're paying higher prices, they're going to feel it. And they're going to feel it. I don't care how many times you see Steve Leisman come out and tell us how great it is, or you go to halftime money report and all those people are like, oh, the economy's great and everything's up. Unless you're feeling it yourself, like us, the
yeah,
economy's not great. It might be great for them. It's not great for us.
yeah.
So,
I agree.
yeah. Real estate, commercial real estate. This week, the sale of a nearly 1 million square foot Manhattan office building listed on the online auction site 10X was completed Tuesday for only 8.5 million. That's 97% less than the 332.5 million that the seller, Swiss bank UBS, paid for Midtown property in 2006. They paid 332.5 million and they sold it for 8.5 million. That's
They
called
just
taking
write
a
that
haircut.
off.
That's called taking a haircut. Okay.
Oh my God.
And that's what's coming in commercial real estate. Okay. And I have other stories in Los Angeles, and, people are just moving out. The real estate, they're thinking about turning them all into condos, but who's going to live there? We got China is full of tall buildings with empty
Right.
condos and empty cities.
Yeah.
We don't need to go that direction. Today, let's talk manufacturing. Okay, and I'm just reading reports as they come out. The New York Empire State Manufacturing Index, this is down New York, plummeted to negative 11.9 in October, down from 11.5 in September. So went from 11.5 on the positive side, which is still negative basically, down to the
Right.
negative side, 11.9. Okay. In September, surprising analyst. Well, oh my gosh, how can you surprise an analyst? I thought that they analyze our stocks, tell us who expected it at 3.8. Okay. This marks
Wow.
the worst reading since May, pointing toward a renewed contraction in the New York State and a solid pace. New orders index slumped 20 points to negative 10.2, and shipments index fell 21 points to negative 2.7. Meanwhile, the New York Fed's gauge of prices paid for materials increased, which is called inflation, to a 6-month high of 29, while an index of prices received by state manufacturers also accelerated. So that sounds like inflation to me, and it sounds like manufacturing's down. Okay, I don't
Yeah.
know about you, and I don't know about Steve Leisman, but I think you're probably more in line with me than Steve Leisman's in line with me on this one.
Right.
Because I think in that report on page 873, you will find a sentence that'll tell you, and that's what they'll focus on how great New York
How great it
manufacturing.
is. Well, we got I got a text this morning from one of our subscribers after that report came out, and he went negative 11.9%. That's humongous, you
Yeah,
know. And
considering
he's
it
in
was
that
positive
business.
11.5. Yeah,
I mean, holy cow.
that
That's
dropped
a
23 points.
gigantic drop.
23
Yeah.
points. Yeah.
And yet
And
it
the markets
nobody
continue
pays
to rise.
attention.
Yeah, we're new record highs in the markets. Okay,
Right.
so let's talk about something else that's big that's kind of fallen off the the front page, and that's Boeing. Okay, so
Mhm.
just days after Boeing announced they're going to cut 10% more of its workforce, I think it's like 11,000 more jobs due to intensifying financial pressure, such as dwindling cash reserves and mounting risk of credit downgrade, as well as a drawn out strike. The beleaguered plane maker filed a $25 billion shelf registration on Tuesday morning. Separately, Boeing entered into a $10 billion supplemental credit agreement with a consortium of lenders. It noted that the credit facility provides additional short term access to liquidity as we navigate through the challenging environment, adding that it has not drawn down on this facility or its existing credit revolver. The latest strike estimates from JP Morgan analysts indicate that Boeing will lose $1.5 billion each month if workers stay off the production lines after commercial jets continue picketing in the streets. 3 major rating agencies have warned that the strikes could downgrade Boeing's investment grade credit rating to speculative territory. In other words, junk. According to preliminary figures, Boeing expects to report third quarter revenue of 17.8 billion and a loss of 9.97 a share. So I think about not only Boeing, but I worked in the aerospace industry, and I think about all the little companies, the 11,000 suppliers that they have all around the world, and how that's affecting the secondary and tertiary, and all the way out to the people, all the way out to the people uh, that provide uniforms for the workers, the people that provide lunches to the workers, the
Yeah.
gas stations around there, all these people, and the companies that may shut down because this was their, 75% of their business is Boeing. But you don't hear about Boeing all that much anymore. But it's
Yeah.
huge, you know.
Well, I was thinking about this morning after reading about these cuts they're doing. Could Boeing go out of business?
Well, if they
I
get,
mean,
if they get, I don't. You don't want to be
could they file
downgraded to junk.
bankruptcy? Huh?
If you get downgraded to junk,
You're
the
basically out of it.
rates you pay on loans is
Oh, it's
huge.
insane. Yeah.
Yeah.
Yeah. And then you think about just what you said, the trickle down effect. They get downgraded junk, their business goes south. Every other 11,000 other businesses who are tied to them go south. That means your unemployment rate starts jumping.
Oh yeah.
And so then what does the Fed
Well,
do?
that
Do
means
they,
and you have high inflation, and that means that okay, how do I feed my family? Can I pay my mortgage? Can I keep sending my kids to college or to school? Uh, and it just it's like a domino effect. But we're just two
yeah,
regular guys. What the crap do we know? You're sitting in a freaking flower field, and I'm sitting in front of a stadium. Life goes
Right.
on, I guess.
I guess
But,
I'm sitting here listening to, you, like you said, if how, how many people do they lay off? Okay. How many people do Boeing ultimately lay off? Then how many people do the other 11,000 businesses lay off? And then how does that affect, how does this whole thing start to go, unraveling? Like somebody asked me today, what is it that's going to cause it to go down? What is it going to cause the stock market to crash? And I was like, I don't know. I really don't know. And I'm wondering, back in the during the great financial crisis, what caused that? Lehman Brothers, was that the pin that blew the whole thing up? What was it that triggered such a big event, and what will potentially trigger another event similar to that? And I look at this and I think it's things like Boeing cutting jobs, Boeing downgraded to junk. It then affects 11,000 companies. What other things does it affect? I mean, if those 11,000 companies are affected, I got to believe 22,000 other companies are affected by those 11,000 companies, and so on and so forth. And so, what is
well,
what is the Fed to do?
add on the auto industry and what's happening in the auto industry and all their suppliers and tear down suppliers. Okay.
Right?
Look
Yeah,
at technology. Look how many people technology is laid off. Okay.
yeah,
Where are they going? What are they going to do?
yeah.
I guess you can go be a temporary worker in the government for a while.
You could,
I don't
but you're
know.
not going to get paid what you're paid at Boeing or these other companies. So
I don't
I don't
know.
know. I it just it's mind-boggling, or is it really not as big as we think it is? You know, I don't
Well,
know. I
I
mean,
don't
is
know
there
how it, I don't know how it can't be. I just don't know how it can be. I mean, I've worked in that industry. I've worked in technology industry. I've worked in the housing industry. It's just I worked in financial services industry. Everything is connected. Then you look at what's going on with China. China exports are down the tubes. Okay, they're trying to stimulate as much spending as they can by letting you borrow against your assets to go buy stocks. Now there's a winning strategy right there. Okay, that's called margin. Okay,
right?
so
We
we've
saw
been
how
down
that
this
worked
road
out.
before. Yeah, and this is the whole
Yeah,
economy of China. And if China's not exporting anymore, that means we're not buying, or somebody's
right.
not buying. Okay. And you see that in Mercedes, you see that in BMW. They're like, what the heck happened to our sales? Well, China's not buying anymore. Okay.
Yeah. Well,
Yeah.
it's like BMW. Like some of the was watching one of the car guys talk about the top 10 worst selling cars, and it was like Fiat, of course, was like number one with 400 cars basically of one model. I'm like, that's a major global brand. They sold
Yeah.
400 cars of a model. Then they got in, of course, Lexus was in there, BMWs, like a lot of Toyota's hydrogen car. Of course, who's going to do that? Um, and it's just some of these numbers for these car manufacturers are really large and they're going to have to give, they've got these cars sitting on their lots, they're going to have to give them away, and that's
Yeah.
going to hurt their earnings
Yeah.
and
I
so
mean,
on.
you look at, we talked about the Ram going away. I think the Malibu's being disconnected, continued too. And now the Malibu's been around since I was in high school. That was
Oh
a
yeah,
cool car back in those days. And if you had a '69 Malibu right now, you'd be happy. You know.
right. Yeah, yeah.
Well, it's
I
not.
think
And
that
go ahead.
go ahead.
No, no, go ahead.
I think that leads into something I wanted to hit upon, is the amount of car dealerships that are consolidating right now. It's projected there's going to be about 500 U.S. car dealerships that are going to consolidate. So that's AutoNation unloading a couple of different Ford dealerships. Um, a lot of these Bear. Uh, let me pull up my notes here. Um, a lot of these major players in the auto industry who have multiple brands are now unloading them. So, for instance, Bear Automotive Group is offloading 8 Virginia dealerships. Um, Toyota dealerships are hot right now. You're seeing those a consolidation in those in the St. Louis area, um, as well as Ed Morris, who has expanded into the Arizona market, is now acquiring 7 different franchises from the Law, uh, Lawley Automotive Group in Arizona, and Auto Nation, of course, is getting rid of 2 Ford dealerships, and so on and so forth. So you're seeing the strain these dealerships are under with high rates, financing rates. They're not selling cars. They're not getting the service dollars that they typically would get. And so all of a sudden they're in this position where I gotta sell to somebody and offload this, or I go bankrupt. And I think you're gonna more and more going to see that in the basic needs environment, like auto dealers, auto companies. You made the comment about the amount of money they put in, a lot of auto manufacturers have put into EV, electric vehicles, and the waste of money they're basically throwing in the towel on a lot of it.
Well,
Um, so
no one's buying them.
nobody's buying them, and I mean, I watched it. I got confirmation of why I will not buy an EV anytime soon. Was I was watching a video on YouTube after the Asheville when Hurricane Helena hit Asheville, and this group of cars was trying to caravan out of Asheville on the second or third day after the flooding. And one of them was a Tesla, and the Tesla went out of the caravan and pulled over to the side of the road because they ran out of electricity, and there was nowhere to charge it because they don't have electricity. So to me, that was
Well,
like, well, that's a problem,
hey, look what happened in Milton. Cars that were down there and got flooded started on fire because salt water doesn't do well with lithium. You
Right.
know,
So,
so
I mean,
those are things that unintended consequences of trying to push technology on people that aren't ready. Now, I'm not saying electric cars aren't good or in the future they won't be, but let the market decide when people want to switch to electric cars. I
yeah, and I
where I
think,
live, I couldn't have it because it gets 20 below here. I could probably only drive 15 miles before that thing fell apart. And I don't want to
right,
be stuck in a blizzard, in the middle of with electric car.
yeah.
So
I think in relation to the manufacturing side of things, you're going to continue to see these numbers get worse. Um, and it's a quarter after, month after month, quarter over quarter number that I think as you see the rate of change escalate, until the point it doesn't, we're going to continue to see that recession in that environment continue to raise its ugly head.
yeah, I mean, look at New York manufacturing. I think Philadelphia comes out later this week. Let's see what happens there. And that's that whole region of the Fed. Okay, it's not just Boeing, it's not just auto, it's everything. That they're looking at.
Yeah.
Even this really hurt me because I really love this particular. I remember growing up and going to these places with my dad. True Value Hardware Store. Okay,
Mhm.
75-year-old hardware store brand has filed for bankruptcy. Is selling substantially all of its operations to a rival company announced Monday. The True Value said it faces significant cash crunch as the housing market stalled and consumers have become far more picky about discretionary purchases like hardware. Gee, I wonder why. Maybe they don't have any money. Maybe they maxed out their credit cards. Maybe they need food more than they need nails and screws these days. Okay.
Right.
Uh, uh, Bigger rivals like Home Depot and Lowe's also have been in the years long slump since the pandemic boom, but they remain a significantly stronger financial situation than True Value. So even our little hardware stores are going down.
Yeah.
So think
I
about, go ahead.
I would even argue that Home Depot and Lowe's is experiencing it as well. And the
Well,
reason is I've spent last 3 weeks, I've been in each one of those at least twice every 2 days uh, for supplies to help out Ginger. But the amount of people working is like half. Like you can't find anybody to help you because they don't have the staff, they don't have the people. A lot of times the place is empty. Typically you would think in the morning it would be busy during the week. Not so much anymore. Not so much. And I think it is that strain on the slowdown in building and construction. And yeah. I don't think they're immune to it. I think they will be. I mean, they got more money, but I think their time will also come as well.
Yeah, I think you're right. What's been running the economy? What's been saving us? Well, AI and semis. So what's happening this week in AI and semis? Well, Nvidia shares fell, earlier this week in pre-market trading, following a record high close on Monday after a report the U.S. is considering limiting exports of advanced artificial intelligence chips from the company and other U.S. peers in the country. So you're seeing, okay, that affected it. But what happened today? ASML holding shares plunged Tuesday morning after third quarter bookings missed average analyst estimates and forecasts were slashed. ASML's dismal ER and outlook cut provided some insight into the health of the AI sector and may suggest that the bubble wanes amid the impact of trade restrictions on exports to China. It was only a little more than a month ago when NVIDIA CEO Jensen Huang presented at the Goldman Tech conference in San Francisco and said that demand on chips is so great and everyone wants to be first and everyone wants to be most. He added, we probably have more emotional customers today, deservedly so. It's tense. We're trying to do the best we can. NVIDIA shares reversed following ASML's third quarter results. Okay, so ASML is telling us, okay, the party is not the same party as it used to be. Okay, what's your take on that? You're more of a
I brought this up on the Friday call, the platinum call about revenue. And if you go back and look at the quarterly year-over-year revenue decline in NVIDIA, granted, it was still excellent revenue growth. It went from 264% up to 122% up. So a very big drastic drop. I'm very interested to see how ASML, as well as all of these others, what their revenue growth looks like, for third quarter. NVIDIA in particular, I would not be surprised if you get in double digits, growth in comparison, which would be very, very telling of what's happening there. And I think that's one of those things you've got to look at this stuff, from a three period point of view, 3 to 4 period point of view. If you see NVIDIA's revenues dropping quarter year over year consecutively for 3 quarters straight, you've got to pay attention and you have to say, hey, maybe this is slowing down. Maybe the cost to borrow money to build out the infrastructure is starting to submit its pain on the overall economy. And maybe that's why you're seeing the Fed lower rates so aggressively, because they're trying to prop this up. It's, you think about it, if you're a corporation, you had to refinance your debt because it came due in this environment, you refinance it probably for double the price. And that's small and mid-sized businesses, that's large businesses. But take that into account with the big run up in this big spend run up that we've seen in semiconductors. Um, at some point it runs out of steam. And I think we're starting to see that. Last I checked, NVIDIA was down 4.5% today. You
well,
know,
let's take a look at ASML,
right?
and I'll show you what's going on today.
But I do think I everything comes to an end at some point. Probably the best advice my dad ever gave me. Oh wow, that hurts.
So let's say you were in ASML. Had you been watching or a part of the Platinum channel, at least you're exposed to my trading guidelines for at least for swing trading. Okay. And I'm adamant that get out of positions when you swing trade before earnings. And you would have gotten out right here. You would have gotten out at $872.27. Well, today we're down 17%. We're at 724.55, down $147.54. Thank you. You've been saved if you follow what we're looking at now. Could have gone the other way, sure, but it didn't. Okay.
Yeah.
And so we can look at NVIDIA too. And the A. Okay. This one's a little better, but you can see what NVIDIA did. It came up and it's hitting the green line of death, which a lot of some of our platinum subscribers don't believe in, but it works for me. It hit it. Now we're down above the 9. We'll see if it can hold that support level. Okay, for
Yeah.
Nvidia. Nvidia has just a lot of what I call religious following. People have fallen in love with that stock like they have with Tesla, and
Yeah.
they don't care what it does or what it says. They're going to follow it, just like some people followed Enron into the dirt. You know,
Right. I think
so
that's more and more where even that one, if you just took that one thing out of your trading plan that you don't hold assets or you at least have some sort of stop on those assets before earnings, because especially in an environment where semiconductors have had such a run up. I think Nvidia is up 170 or 170% prior before today, year to date. I mean, the chances of that continuing are, and especially if you're looking at the fundamentals of this sector, it's slowing. And you take into account the economic, the macroeconomic conditions, it's gonna slow. I mean, things just don't go up forever. Eventually gravity does kick in. And I think you're starting to see it. And I think you're going to see more of this in this high risk area, unless you see a massive cut in the cost of money in the Fed funds rate. I would be surprised if they do, but they would have to massively cut the cost so that it's more affordable to refinance debt and then also to buy to continue to build out this stuff. So I
it's
don't
going
know.
to
I think that's a sector that's at risk.
the reason I like to exit, it's a 50-50 proposition. Okay.
Yeah,
When you come up to earnings, it's either going to go up or it's going to go down. If I already have a profit, why would I risk $147 on the downside, especially the way this moves? Get out if you want, you can buy back in later after the news.
yeah,
But that's how we trade over there. That's how we and that's my philosophy. So others in our platinum channel, they like to buy before earnings. Okay. And sometimes you got a 50-50 shot. So there you
sure.
go. Today would have been in favor of me. Okay. So
Well, and I think if you are one of those who buys before earnings, you also have to include into your plan, your investment plan or trading plan is what other factors could be affecting their earnings that I'm not looking at. And I think it's always asking good questions. And I think that's one of the biggest pluses of our community is you can ask those questions and you can get different responses. But I do think it's something that a lot of people have begun to ignore the fundamentals of the global economy, and now it's starting to show up. And I think that's where you really got to look at where what propelled these companies go higher and what's going to propel them to go lower. And I really believe it's a lot about availability of affordable borrowing.
well, and
That's
that
how they
comes
build
down
these things.
that comes down to local and macroeconomics. Okay. So if I'm not working, who's going to buy anything? And it goes down even like it again, true value went down of all things. The other thing that I used to love was TGI Fridays. Okay. I love their
Yeah,
potatoes. Their potato skins, I could make a meal, go there every day, when I was down in Texas. TGI Fridays making headlines once again as a casual dining chain recently closed at least 12 more locations across the United States over the past month. This is the latest round of closures comes on the heels of declining sales and increasing operational costs that have plagued the brand in recent years. We see the same thing: declining sales, more cost, declining sales, more cost. Why is there declining sales? Because people can't afford to go out anymore. Why is there increasing costs? Because of inflation. Okay.
yeah,
Again, let's go back to Stellantis. Okay, they've been in the news a lot, and you don't see it a lot. Them and Boeing. As a part of the deal with the United Auto Workers, Stellantis agreed to invest nearly $5 billion in a factory. I believe it's in Indiana. It's a battery factory, retooling the auto plant and constructing a parts distribution center and an EV battery plant. The plan was expected to create 1,300 jobs and launch in 2028, but Stellantis announced in August that the reopening would be delayed, ensuring the company's sustainability. Okay, so they're not going to do that, and now we've got people that are going to strike in Stellantis because of that. I just I don't see the labor market getting any better. But I don't want to be just negative all the time. Okay.
Good.
I look for good news because I'm just not that guy. So there is good news out there. And if you're a bank, the news is really good because US banks have experienced a massive financial gain due to the Federal Reserve's high interest rate policy. This windfall is estimated to be around $1 trillion. Dollars. The situation arose because banks earned higher yields on their deposits at the Fed. Many financial institutions did not pass these increased rates on to their customers. Okay. So they're getting 5.5% and you're getting, 0.2%, and that they're
Right.
keeping the rest. The Federal Reserve maintained elevated interest rates for 2.5 years. This extended period of high interest rates allowed banks to earn more on their deposits. The Fed overnight rates reached 5.5%, significantly higher than what banks paid to their depositors. And then there's other effects, of higher interest rates. Now, maybe this isn't as good news. For the federal fiscal year that ended September 30th, the budget deficit was 1.8 trillion and the interest expense on debt was 950 billion, up 35% from the prior due to mostly higher interest rates. Okay. Last thing, at least there's a windfall for mom and pop shops. Okay. Private equity firms nationwide are now acquiring home services companies such as heating, air conditioning, and plumbing and electrical businesses, aiming to create larger, more profitable operations. So all your local guys that will come out and be your plumbers are now going to be corporate. Try to call, try to get service. That's going to be a disaster. I love my plumbing companies. I love my air conditioning companies. They're all local who come out. I give them a call. Yep, we'll be right out. They're there. Okay,
Yep.
reasonably priced, small businesses. Now they're selling out to private equity firms. What are they going to do to it? So anyway, that's the end
Yeah.
of Mark's rant. It's 2 weeks worth of pent up frustration. But I'm just a regular guy and I look at the world the same way as most people. If you think everything's fine, go out and look around your own economy. Look at the grocery stores. Go look at bars and restaurants. Go buy a pair of tires, set of tires, and see what that costs you. Okay. Go down to the gas station, see what's going on there. But everything's fine and we're in for a soft landing. I think not.
No, I think it's Agent Mulder said it on X Files. Question everything. Question everything. I love that
Yeah.
show. But it's true. It's understand somebody on the other side of the table has a motive. They have a different perspective than you, and if you can figure out what that is, that can give you some really great insight to why they're saying what they're saying or why they're doing what they're doing. And I think we're in this environment of just this chop bucket where you're going to be up and down, probably for the next 20 some odd days until the election. And then I think once that is determined, um, then then the doors are going to open up to the truly what's in the closet, and it's not going to be diamonds and jewels and puppy dogs and rainbows, in my opinion. So I think this is where you just got to be really questionable of what you're in. You have to have a plan. I think that more and more risk management, it has to be your number one approach to investing, even on from the short term all the way out to the long term. How much can I afford to lose before it affects my future goals and dreams? If you're in retirement or getting it close to retirement, if you're 55, or you have to ask yourself if 62 or 65 is your retirement goal. If you saw a 10, 20, 30% reduction in your 401k, could you and you had 4 years of sideways movement, which is what the great financial crisis looked like before you got even. Are you willing to delay your retirement? And the answer is probably no. So that's why you have to have a really strong risk management process. And if you don't know, have one. That's why you should join Best of US Investors. Simple as that. We'll help you, guide you that way to help you protect your assets. So I don't know, Mark. It's concerning. I'm sitting out here in Round Top, Texas, one of the largest antique and art shows in the United States, and historically, it is very busy. A lot of buyers, a lot of interior decorators, interior designers, a lot of retail individuals. And we've been here since Saturday, open Saturday, and I'm just not seeing the numbers right now. And it's concerning. I'm concerned for my wife and her business and the expense to get here. But also, um, is this a view into what is coming when it comes to the consumer and their spending? And I don't know. We'll see. I'll report more on it.
Yeah.
Next week I'll definitely share the second week and what happened this week with you.
Well,
So,
I don't need you to because I watch CNBC and they say the consumer is resilient and the economy is strong.
well, Mark, I'm the truth.
Page 842, Steve
Right,
Eastman.
right. I am like Bonds. I am the truth.
Well, you just got to
That's
be aware
another
of your
thing, Mark.
surroundings. What's that?
Look at the 10-year. The
Oh yeah.
10-year yield going up.
Well,
People are
what's going on
exiting, which
and what's going on with the mortgage rates?
going up.
Yeah.
Yeah. Even though they lowered rates by 50 basis Fed funds rates, you would think that would somewhat transfer over in some way. Nope. No. I think 4.22% is sort of the target I have for the 10-year right now. Um, that's that's a big move, especially since it was down around 3.5, I think it was or so. So that
Right.
means mortgage rates are going to go up. So crazy. Anyhow,
Always.
Mark, anything else on your mind?
Nope. I'm just going to go watch Yankees hopefully beat Baltimore tonight and
Best of
move
luck.
on to 2-0. And what's that?
I best of luck on that. I am rooting
Yep.
for the even though I'm not a big baseball fan and even though I'm not a fan of any of them, I'd love to see a Subway series. I think
That'd
that
be fun.
is classic. I think of the 1930s subways and that kind of rivalry kind of thing. So,
Well, we looked it up and it hasn't happened since 2000, so 24 years ago.
which
So,
was yesterday. You and
yeah.
I haven't aged at all.
Nope,
Uh,
nope, nope. Been the same.
yeah, exactly. All right. Well, definitely hit the like button, the subscribe button to this video. Share your comments below. We'd love to hear what you think about the economy and what's going on, but also what else you would like to hear from us during these broadcasts that Mark and I put on each week. As well, check us out at www.bestofusinvestors.com or www.bus13.ai. Takes you to the same place. The bus13.ai is easier to type in and you avoid a lot of misspellings like I do. But check us out. We have 3 levels. We have the silver level, which is $9.95 a month. We have the gold level, which is $19.95 a month, and we have the platinum level, which Mark is the captain of, and he steers that ship, and that's $60 a month, and that brings in everything from silver to gold to platinum, along with a whole lot of other stuff like swing trading, watch list, Mark's commentary on different opportunities in investing, and soon to come a long-term portfolio strategy using technical analysis. And Mark's in the process developing that. Hope to have that out in the next couple of weeks. But check us out, www.bus13.ai. In the meantime, have a great week and stay safe and live loud. Peace.
And cut.